Very good evening to all of you. Welcome to another YouTube live session with me, Srujit Kakkar. And today we will be understanding what is a trailing stop loss. So let's get started with today's session. Welcome you all. Today is Wednesday, 15th of April 2020. And like I said, today's topic is going to be trailing stop loss. We will be looking at different kind of trailing stop loss. I'll give you about 5-6 examples, different ways you can use trailing stop loss. Now, before we continue with the session, let's get done with the formalities. So make sure you people go through the disclosure. It talks about the representation, the risk disclosure, the risk involved in the market, and also about the copyrights. So let's get started with today's session. So the first thing is to understand. Alright, so to understand what is trailing stop loss, the first thing we need to understand is what is a stop loss, right? So let's start with first what is a stop loss, and then we'll move on to what is a trailing stop loss. So let me bring up a blank space. So let's assume that you wanted to buy a stock, and based on your analysis, let's say just give me a minute, let me take a line tool, which will be much better for me to draw a straight line, right? So let's imagine that yes, you did your analysis, and based on your analysis, your buying level or the price at which you are willing to buy a specific script is, let's say, 100 rupees. So this is the price you want to buy, and let me also put here as buy. Now what happens is, whenever you are entering a trade, right, it's not always a sure shot that it's going to be a winner. So what can happen is prices can go in your favor, prices can also go against us. So what we do is, whenever we plan a trade, yes, if it goes in my favor, that's a very good thing. But in case it doesn't go in my favor, then we also need to have an order placed in the system to limit my loss, so that I should not be losing more than an X amount of money which I want to lose on that trade, because nobody knows which trade is going to be a profitable trade, nobody knows which trade is going to be a losing trade. So we always need to have a protection in place. So let's assume that I don't want to lose more than 2 rupees per share. So what I'll do is I'll place an order which will be now a sell stop order, right? So it will be called as a sell stop market order. That's the technical terminology. It's a sell stop market order at 98. So what is going to happen is, when the prices they come into my zone, yes, immediately, the computer system, because the order will be placed, will buy for me. In case it continues moving up, yes, I'm making some money on that. But in case it doesn't go in my favor, then I have a stop loss to protect me. Therefore, if the prices they start moving down, as soon as it comes to 98, I have bought at 100. My sell order will execute at 98, and I will be out of the trade with a loss of 2 rupees per share. So if I'm having, let's say, 100 shares, I'll be losing 200 rupees. If I was having 2000 shares, I'll be losing 2000 rupees. But that is how you basically put a stop loss. So the basic purpose of a stop loss is to limit your loss, right? So that you have already predefined how much money you want to lose on that specific trade. Now, one thing which I'll definitely add here is that I know some of these terminologies can be a little bit overwhelming. So just in case you don't know these terminologies, long time back I have done sessions on how to place orders, available both in English as well as in Hindi. So you can watch my recordings on that. You can go to my YouTube channel, search for how to place orders, and you'll be able to find both the recordings in English as well as in Hindi, right? So that is where you'll understand what these terminologies are all about. So this is called as a stop loss, right? So where you are limiting your loss. Now, what is a trailing stop loss, right? Let's move on to the next step, because now we understand what is a stop loss. Let's move on to what is a trailing stop loss. Now, many times you would have seen what happens is, you buy a script, it starts going in your favor. Let's assume it goes to 103, and you're still waiting for your target. Your target might be at, let's assume, 106. Because it has not yet hit your target, right? We are somewhere in between. You're still waiting for your target, but what happens, all of a sudden prices they again start coming back, and now you are out of that trade which was in profit. Now you are out of that trade in a loss. So what we basically mean by a trailing stop loss is by using something where I can start locking in whatever is on the table, right? So whatever profit is there, I start locking that in. So an example can be something like this. So let's say if I was still looking at 106 as my target, let's assume when the prices they go to 102, right? So now what I can do is, because prices have already gone in my favor, I can revise this sell order from 98 to 100. So what is going to happen, this is called as break even. So if the prices now come back to this level, now I bought at 100, I will be selling at 100, no profit, no loss, I'll be exiting that trade. So now let's assume, you know, my stop loss is revised to my break-even point. This is where my stop loss is. Now again, if the prices they continue moving up, now what I can do is maybe I can revise it to 101. So let's say prices they go to 103, I revise it to 101. So what is going to happen now? In case prices they move down, I will still be making this 1 rupee. In case it continues to my target, yes, I can make bigger profit. In case prices, let's say, move further up, 104, now maybe I can revise my stop loss to 102. So now this is where my stop loss is. So if the prices they come back, I'm still making 2 rupees. If it continues, yes, I can have bigger profit. So this is what we call as a trailing stop loss. So a trailing stop loss is basically a stop loss where you're locking in your profits so that in case it goes against you, you're still making some money on that. In case it goes to your target, you still have that possibility to trail on to that position unless and until your target is met. So let's now understand what are the different ways we can use trailing stop losses. So let's bring that up. So again, in conventional technical analysis, different people can be using different methodologies for a trailing stop loss. So what I'll do is I'll show you with an example. Now this is a trade which I shared with the POS Plus subscribers just few days ago, which was on Tata Motors DVR. So I'll take that example and I'll be using different kind of trailing stop loss just to show you how it can be trailed. So let's bring up the trade idea first. So this was the trading idea. So this was the day when we planned it. The structure looked something like this, that this is the demand zone where we want to be a buyer. We are waiting for prices to come back. So can you see, as of now, I know that this is where my entry is, 33.535, and if in case it goes against me, then I'll be exiting at 32.55. So I know I'm taking a risk which is about, let's see the exact number. So if I click here, so this tells me that, oh no, I don't have that tool drawn, so not a problem. So what I can do is we can use the calci. So we have 33.35 minus 32.55, which means I'm taking a risk of about 80 paise. So in case prices they go against me 80 paise, I will be exiting that trade with a loss of 80 paise per share. Now what happened? Prices they started coming into the zone. So let's do this. Let's first add a moving average, because as of now we are understanding moving average as a stop loss. So let's bring in moving average, moving average, and it doesn't matter, you know, you can use exponential, you can use you know, your simple moving average. That's your choice. And again, one question which I get very frequently is what is a good number, right? So what you'll have to do is you'll have to backtest and see that on that specific script what is working good for you. But don't use a very small number, because if you're using a very small number, it will be reacting really quick. If you're using a very big number, then you might be giving back a lot of profits. You can use something in between. I'll say maybe 20. So I'll just put it as 20. And now this is where we have a moving average. So now what are we waiting for is we are waiting for prices to come back into the zone. So let's do that. So you can see that on this day, prices came into the zone and we got the entry. So now that I have my entry on this, what I would like to do is, let's assume my target was somewhere in the past. So if when we did the analysis for this one, our target was in fact really far back, but let's assume for a minute. In fact, let's see, where is my target on this one? So this could have been your target. Let's draw a horizontal line. So let's assume this is my target and that is where I would like to book my profits. So now that I'm in the trade, I know that I have a target which is more like maybe 4:1, 5:1, 6:1, maybe 7:1 or 8:1. Now I can start trailing for this target. So how can I start trailing? In case I'm using the moving average, what I'll be doing is I will be waiting for some price action to happen, because as of now my stop loss is still at 32.55. So once this price action starts happening, right, and now what I can do is wherever this moving average is, that is where my stop loss can be. So as an example, because now this is where the prices are and that is where the moving average is, so my stop loss would be here. So in case if the prices they start coming back now, what is going to happen? I'll still make this much profit. In case it continues towards my target, not a problem, right? Because that is what we are waiting for. So let's do this. Let's move ahead and see what happened next. So can you see now you have the next candle. Now your moving average has moved up, so I can revise my trailing stop loss to this point. Again, prices have moved up and you can see we have a new point where my trailing stop loss can be revised. Again, we have a new point. My trailing stop loss now can be revised right here, right? So I'll just zoom in so that you can see that moving average whenever, you know, it refreshes. So can you see now this is where the moving average is. I can move my stop loss here. Again, I can move my stop loss here. Now what I'll recommend is, now this is not something which should be done, that every time prices are moving up you are revising your stop loss. If you wish to do that, yes, can be done, but a better way to do this can be that you can wait for the prices to close below the moving average, and once the prices they close below the moving average, you can book your profit, right? So that is what can also be done. So yes, if you're aggressive, you want to trail it candle by candle, you can do that. If you want to be a little bit conservative, then what you can do is you can wait for the prices to close below the moving average. So let's see, when did the price close below the moving average? So I'll just keep bringing in next candle and next candle and next candle, and what we are doing is, we can trail it. Now as an example, as of now, this is my current candle. I can now trail my trailing stop loss if I wish to, somewhere around here. So what is going to happen, in case prices they come back, I still make this much profit, right? In case it continues, yes, I might get my target, right? So it can be trailed, or you can wait for the prices to close below your moving average. But a good idea would be that whenever prices have gone in your favor, you get an opportunity, you should be revising it every few candles, because if you're not revising it, and then what can happen is, by the time prices they close below the moving average, the next candle might be a very big candle which takes away majority of your profits. So a good idea would definitely be to trail onto it every few candles, but yes, it completely depends upon your availability. If you're not available, then you can just wait for the moving average to close. In fact, what I'll do is I'll just bring up everything, so you can see if you were trailing onto it. The fact is, during the trailing, okay, let's do this. Yes. Right, so the fact is that during the trailing, you can see not even a single time prices they came back to our trailing stop loss. In fact, it first hit our target, and after hitting our target, it started moving down. Now, just in case your target was, let's imagine, even further away, then what could have happened is, can you see now prices are still not closing below the moving average, and this is the first time prices closed below the moving average. So that would have been the trigger for you, that now because the prices are closing below the moving average, maybe this uptrend is losing steam and I should be booking my profit. So that is how you can use a trailing stop-loss. Yes, if you're doing it on closing basis, that is where you'll be exiting. But if you were doing it based on wherever the moving average was, then probably on this candle itself you would have exited that trade with this much profit, which is a little over maybe 4:1. So that is one example where you can use moving averages to trail your stop loss, right? And you can also use it as a signal to maybe book your, okay, so that is where we had the target, right? So that was our target. Now let's take another example. I'll again do candle replay. So this is where the candle replay would start from, because that is how we planned the trade. This is how the structure was. So we have already talked about moving average. Let's look at another way how you can trail your stop loss. Another way can be pivot points. Now what do we mean by pivot points? The pivot highs and pivot lows. So yes, we do have an indicator on trading view. Otherwise, what you can also do is visually you can try to see where are the highs, where are the lows, the turn in prices, and that is where you can trail your stop loss. In fact, let's do this. It's going to be much more quick this way. So like here you can see this is where you got the fill. After getting the fill, now we are waiting for a pivot low to form. So as of now, this is my pivot low, because prices they came down and started moving up. So from my stop loss being at a loss level, now it can be at a break-even level, right? Almost at a break-even level. So that is your pivot low. Now I can again wait for new pivot lows to form. And here you can see that we didn't have any pivot lows, but yes, now prices came down and again started moving up. So your trailing stop loss, oh, just give me a minute. Just a second. All right. So your trailing stop loss, which, just give me a minute. All right. So I'll just bring it back. Give me a second. Should not take long. And we are back. So your trailing stop loss, which was initially here, now you can see you have this pivot low. Prices came down and again started moving up. So you can now revise your trailing stop loss here, because that's the next pivot low. And after that, you can see prices have been moving down, and this is where you would have exited. So that is another way, which is where you can use your pivot highs and pivot lows to trail it. In case you want to use it more mechanically, you can even apply this pivot high, pivot low indicator. pivot, pivot highs and pivot lows, right? But what you can do is, because this pivot high, pivot lows depends upon, you know, what is the setting. You can make it a little fast. Probably I can give it as 5 and 5, and now you can see it keeps marking this is where my pivot low is, that is where you can revise it. Sorry, this is where the pivot low is, that is where you can revise it. Then it is telling me this is where the pivot low is, that is where you can revise it, and that is how you can also trail your stop loss using your pivot highs and pivot lows. So that's the second way. So one way was the moving average, second way we saw was using pivot highs, pivot lows. The third way of using a trailing stop loss can also be your percentage. So what you can do is, based on some percentage, that every time, let's imagine prices they go 0.5% in my favor, I will push my stop loss another, let's say 0.5% above. So example, if this is where we entered and now prices have gone to this level, now I can say, because maybe let's assume this was 1%, because prices have gone 1% in my favor, let me push my stop loss 1% above. Again, prices have gone 1% in my favor, let me again push my stop loss 1% above. So what is going to happen is that every time you get a 1% move, so example, initially you were here, because prices have gone to 1%, now you can revise here. Again, prices have gone to 1%, you can revise it right here, right? So again, if you would have done something like this, can you see in this case you would have been out of the trade right here, and then you would have missed the move. So that is what I was telling you. You will have to look back and see that what gives you better result, but I'm just showing you different ways which can be used. But generally I don't prefer the percentage or the point value system, because that is not using anything technical. But yes, there are many people who use this. But yes, if you want to use percentage or you want to use some value, a better way can be your ATR, right? So what is ATR? ATR stands for average true range. I have done a session on ATR as well. In case you have not watched the session, you can even do that. And yes, before we move forward with ATR, I would like to add that I do about 2 lessons every week and one market analysis, weekly market analysis per week. So it's 3 sessions per week. For the lesson sessions, the days and the timings are not fixed. Based on my availability, I take those sessions. So how do you get notified? You can subscribe to my channel, hit the bell icon and select all notifications. 10 to 15 minutes before the session starts, what I do is I start with the countdown timer, which will give you a notification that the session is about to start in about 10 to 15 minutes. Yes, if you're available, you can join it live. In case you're not available, later you can watch the recording. Sunday session is fixed. I do it at 1 p.m. now, Indian Standard Time, where we try to identify where are the key demand and supply zones on some of the major markets. Alright, so let's get back to ATR. So now what I can do is I can use ATR. Now what do we mean by ATR? ATR basically tells us that what is the average move on this stock on the time frame I am on. Example, as of now I'm on a 15 minutes chart. So it is telling me on average how much does a stock move every 15 minutes. So what I can do now is that wherever the recent high is, example, I got the entry. After the entry, prices have moved to 34.2. And now from here I can see that my average move on the 15 minutes, every 15 minutes is about 56 paise, right? So this is where you can see that the average move, you will get the number here. So let me again point to that candle. So can you see when I'm pointing to that candle, it is telling me it's about 56 paise. So what I can do is wherever the recent current market price is, let's assume maybe at the closing of the candle, I can revise it 56 paise below it. Now closing of this candle, I can now revise 60 paise below it. Closing of this candle, I can again revise it 60 paise below it. So that is one way. Now many people, what they do is they don't just use the ATR number, they use 1.5 times the ATR, or at times even twice the ATR, even more than that. So again, you can see what is more comfortable for you. Example, if you see here, we are at, if you look at the closing price of this candle, okay, so let's assume this is 35. So my stop loss would be about 50 paise below it, so it could be at 34.50, which is somewhere around here. So this is another way where you can use your ATR based on whenever the candle is closing. You can use the ATR value, you can use 1.5 times of it, you can use, let's say, twice of it. That's definitely your call, but that's another way. In fact, I'll say instead of using the percentage, this could be a better way, because this actually helps you understand how much is this script volatile, and we are now using that number, because if you see, if you're using 1% of 35 rupees would be around 30 paise, but this is telling me that it has to be at least 60 paise, and as and when the market is getting more and more volatile, this number will start becoming bigger and bigger. If the market starts becoming flattish, the number will also start becoming a little smaller. That is what you can see, that based on the move, the number starts increasing. If the moves are not very volatile, the number starts decreasing, and that is also what you can use as your trailing stop loss. So that's another way, which is ATR, using the ATR number. The next way can be, let's see, what do we have? So we have already done with 4. We have 2 more ways how you can use the trailing stop loss. So the next way can be a candle stop. Now, what is a candle stop? This is what people do in a candle stop. Once you get your entry, now what we do is we wait for a new candle to form. As soon as the new candle completes, we put our stop loss at the low of the previous candle in case you're having a long position, or high of the previous candle in case you're having a short position. Now in this example, you can see that this is where we got the entry. Now the next candle has completed, so my stop loss can be below the low of this candle. Now the next candle has completed, so my stop loss can be below of this candle. Now the next candle has completed, so my stop loss can be below of this candle. Next candle has completed, so my stop loss can be below of this candle. Right, next candle has completed, now my stop loss can be below of this candle. Next candle has completed, now will not be pushing it up. Why? Because we are still in that range. Because if you're pushing it up, you are now, can you see, prices have already gone below this. So we would not like to do that. We'll only trail it provided that area has not yet been breached. So you can see we are still there, so we'll not be making any change. We are not making any change. So now you can see when you have this candle, in fact this candle, now I have the possibility of revising it to this. Then again prices, they move up, so I have the possibility to revise right here below this. Again prices are moved up, we'll keep it here. Again prices are moved up, now we can revise it to this candle. Again the next candle has formed, we can revise it to this candle. Again the next candle has formed, we'll still keep it here because there is no change. So again, as of now, we are not making any changes because no, I mean we can make a change right here because this is where we do have a candles. Oops. So it can be revised now to low of this candle. So now what we can see is prices, they didn't quite hit it as of now, but now this is where you would have been out of the trade because you were doing a candle stop. So every time a new candle was forming, you were just revising it to the low of the previous candle because you were having a long position. And similarly, in case of a short position, you will be revising to the high of the previous candle. So this is called as a candle stop, where you're using the previous candle. Now some people, they use 1 candle, some people they use 2 candle stops, some people they use 3 candle stop. That also completely depends upon how aggressive or how conservatively you want to do that. 2 candle stop would mean something like this, because this is my current candle which completed, so I'll be using first and second, the low of this candle. Now again a new candle has formed, first and second, low of this candle. Again a new candle has formed, first and second, low of this candle. So yes, you can choose based on your personality style whether you want to be aggressive or conservative. 1 candle stop, 2 candle stop, 3 candle stop, that's your choice. And now let's move on to the last one, which is Parabolic SAR. So what you can do is you can just apply this indicator, which is called as Parabolic SAR. Let's bring that up, Parabolic, Parabolic SAR. And you will see that this Parabolic SAR basically gives you these points. So what I can probably do is I can make these points a little thick. Is it possible? Okay, so we have crosses, and this is the precision. Circles, right? So let's put some circles, but it's, yep, I think this is where we can make it thick. Perfect. So now can you see this is where we got the entry. So after the entry, what we can do is, can you see these points which we can see? So every time a new candle forms, we start getting these points. So we can use these points as our trailing stop loss. So can you see, as and when the prices are moving up, this also keeps moving up, and this is where your stop loss would have been by now. Right, so you can see if we have been revising it every candle, this is where we would be, and this is where now you would have been out of the trade. So this is also a way how you can have your trailing stop loss so that you don't have to do any calculations. Whatever the indicator is telling you, based on that you can keep revising, because it's a trend following kind of an indicator. Basically Parabolic SAR stands for the SAR, basically, you know, the way it is called, I mean the reason it is called as Parabolic SAR is because, can you see the way the structure is formed? It's basically a parabolic structure. And SAR basically stands for stop and reverse, right? So a lot of people, they also use it as stop and reverse. So example, if this is where they are getting stopped, right, Now they might even reverse their position. Instead of long, they might form a short position, and now they might start using this as a trailing stop loss. So that is why it is called as reverse. SAR stands for reverse and stop and reverse, right? Not reverse and stop, it's stop and reverse. So that's another way, which is parabolic SAR, where you don't have to do any calculations. Whatever the number the chart is showing you based on that dot, because that is how the parabolic SAR is plotted, you can use that number as your trailing stop loss. So yes, this is what we should be doing in trade management. We should be having rules when to start trailing, how to start trailing, so that whatever is on the table you can start protecting it, because nobody knows what is going to happen next. The sooner you start protecting your gains, the better it is for us. So that covers the session, which was trailing stop loss. Let's see what do we have in the chat box. So if you have certain questions, queries, I'll definitely answer them quickly, and then we'll get done with the session, because today I have to get done in another 5 minutes, because I have some commitments, due to which I wanted to be free by 6:45, and we have another 4 minutes. So let me just quickly see what do we have here. Alright, so very good evening to everyone. So any special webinar during lockdown on trend lines eagerly waiting? So yes, I am taking these sessions one by one. So let's see when trend lines they get covered, right? So maybe sometime down the line. Right now my chart is free from all indicators. Is it necessary to use ATR, etc.? See, it's not required. See, if you the fact is all the indicators are always lagging. So if you are using any indicators, you will always be having a lag. For the entry, I'll say yes, we should not be using it, but for other things like your trailing stop loss and all, if you wish to use it, that's your choice. But I know, Santosh, you have done the demand and supply course with me, so using demand and supply levels would still be a better way to use your trailing stop loss versus again using any of these indicators. Right, so please do one session on options change. So I am creating the slide deck for options. So I will be doing a series of not just one session, it would be a series of session on options. But yes, because I've just started with the PPTs, it's going to take me some time, and once I'm ready with the PPTs, then I'll definitely be doing a complete series on options. So yes, I'm working on it very, very soon. Out of your experience, it's just keeping your profitability in mind. Is it better to trail stop or not to trail while trading with demand and supply methodology? Or see, this is what I'll add. This completely depends upon your personality style. Now, example, if you are a person who is planning trades very conservatively, so the very first thing is, you know that the number of trades you will be getting are very few, because you are by default trying to pick the best of the best trades, right? So in that case, I'll say it probably can be a stop loss or your target. Why? Because you're already trading very conservatively. But if you are planning trades in a very conservative, with a very aggressive fashion, right? So if you're now taking aggressive trades, then it is better to protect as soon as possible. So this will again vary based on your personality style. As an aggressive trader, the sooner you trail onto it, the better for you. As a conservative trader, yes, you can have that advantage that it's either my stop loss or my target, no trailing in between. But yes, this is what you'll have to see based on how aggressively or how conservatively you are planning trades. Can we expect updates on POS Plus soon? So Santosh, it's going to be the same. Nothing will change. The rules will remain the same, the process will remain the same. I have been following this for almost over 10 years. There have been no changes in the last 10 years. So the methodology never changes. It will always remain the same. I want to see your live trades. So day trader, I am analyzing a lot of scripts on the Sunday session. We are doing Nifty, Bank Nifty. We are doing S&P 500. We are doing silver, crude oil, gold. We are also doing some forex scripts where I am analyzing the levels, not just live, but even before the markets they go live, right? So we are planning well in advance. I have recordings available on my YouTube channel for almost over a year now. You can watch as many of those recordings possible, and you will see that everything we are pre-planning. So it's even one step ahead of doing live, pre-planning it. Everything is pre-planned. Where is the entry? Where is the stop loss? So you can go through those sessions. Which RR based trailing best set and forget style without sitting on the PC? So Siraj, like I just answered this, Oral also asked the same question, what is best? Like I said, it will completely depend upon how you are planning your trades, whether aggressively or conservatively. Based on that, you can do that. But yes, if you talk about the emotional part of it, set and forget will always have an advantage, because the more you're watching your trades, the more you tend to spoil your trades, right? So that is where you will definitely have an edge. But again, you will have to see it, what is your personality style? how you're planning trades. Are they very aggressive? Are they very conservative? Based on that, you can make your decision. Right, so I just answered that. I mean, RR based trailing stop loss best for set. Yep, so I just answered that. Wishing you and your family. Yeah, and wishing you all the same. Perfect. So that brings us to the end of today's session. Thank you so much for joining in. I will be seeing you apologize very soon again. And yes, the topics which I do are based on the topics which I'm getting from you people. So if you want me to take certain topics, make sure you put it in the comment section on any of my videos. I am noting down these topics, and over a period of time I will be covering these topics one by one. So thank you again so much for joining in. Stay home, stay safe. I will be seeing you again twice this week. Until then, take care, trade safe. Bye bye.